will not be presenting right now, and then you can visit the stalls over there for personal queries. Now the next session will be Finance Colloquium. Vitamin M. You don't get it from greens or carrots. Vitamin M faces no aversion. You don't require vitamin M for your survival, but it's the virtual oxygen. The sight of vitamin M itself boosts up our energy. Want to know what vitamin M is? It's money. Treat money like your soldiers. You send them out to war every day. You want them to take prisoners and come home, so there's more of them. Money is only a tool. It will take us wherever we wish, but only when utilized wisely. This is where finance comes into picture. Finance is all about money management. From entrepreneurial perception, finance is the study of value and resource allocation. It answers all the queries which challenge entrepreneurs: how much money can and should be raised, when it should be raised and from whom, what is a reasonable valuation of a startup, and how should funding, contracts and exit decisions be structured. If you want to reap financial blessings, you have to sow financially. Mr. Nagappan Valliyappan, who is called the Wealth Doctor, currently works as the Independent Director at Tamil Nadu Industrial Development Corporation and Tamil Nadu Newsprint and Papers Limited. He is also the President of Securities and Timeshare Owners Association. He is the owner of Oriental Stocks that was started over 2 decades ago. He is the Chairman of MSc Institute of Capital Markets and the Director of Madras Stock Exchange Limited. He also serves as the Chairman of the Federation of Indian Stock Exchanges. He is the member of the Advisory Committee of Madras Stock Exchange. Mr. Nagappan Valliyappan, who is an MBA gold medalist, is here with us to help aspiring entrepreneurs discover how to attract money to fully commercialize their concepts. I welcome Sir to help the aspirants explore various funding opportunities available for the startups.
Good morning, friends. I believe you had a fantastic session yesterday with interesting people addressing. I was just discussing with your principal about, I'm sure you must have enjoyed Mr. Lakshman Natarajan's session yesterday, isn't it? Today, I think I was listening to the presentation of 4 students or the 2 teams. Very interesting. And in fact, I wanted to ask them a few questions, but again, after the event, I'll go and ask them. Yeah. About the funding aspect, what I think looks like both of them were looking at bootstrapping. Now look at the startup ecosystem globally and India. This is how I'm going to make it, though we have a very limited time of about a maximum of 30 minutes. I would rather prefer taking some questions from you than me doing the monologue. The startup ecosystem globally, how is it in India? And then the various ways and means of funding. That brings an interesting usage, ways and means funding, which we use in government. Whenever there is a shortage, we go to the government and ask for funding. It's called ways and means finance. So ways and means of funding it. Now you look at the global scenario compared to Indian scenario. The same students, or I don't know how many of this team, if you go and tell your parents that you're going to, going for a startup, I'm sure they'll be very jittery, most of them at least. Now that's a basic problem here, the mind block. 2 important ingredients before I go into the PowerPoint presentation. One is, the first thing is that, the last slide of the first presentation which I was watching, the team. The team is very important. When you're studying in this college, don't think that you're simply coming for these 4 years and going back. You are also indirectly building up a team. If you speak to any good lawyer or if you speak to any good doctor, they will all tell you that, in their 30s or 40s, most of the team or most of their vision, most of their dreams became reality because of the team they built during their college days. That's very important. Second is the support system or the ecosystem, like your parents and friends and relatives. That's where we differ from the global scenario, where the innovation is encouraged and very importantly, the failure is never punished. frauds are punished. The frauds are punished much more efficiently than in India. Look at the Rajaratnam case, insider case, trading case in US. Within a year, he was put behind bars. And such big personalities like Rajat Gupta, everybody, all put behind bars within a year's time. It will not happen here in India. That's a fraud. But then genuine failures were never punished. On the contrary, even after a few years, the same promoter comes to you, they'll give you money. It has happened in America. I'll tell you some of the case studies, I'll show you how it has happened internationally. The important thing is failure never punished. And some of the big startup stories in 90s, if you look at it, Hotmail, and then recently Uber, Airbnb, Booking.com, these are all some international success stories where these companies don't own any tangible, any asset. They don't have any asset. What is their asset? Their asset is the customer. The asset is the hold they have over the customer. The customer listens to them, not to the owner who has the taxi or not to the owner who has the hotel. So that is their asset. And the basic technology, the ingredient is the technology which is involved in aggregating all these people. So basically they are all aggregators. So the terms of the business is changing now. And generally the dragons are now preferred to unicorns. What are dragons and unicorns? Unicorn is a coin, I mean this venture capital or this funding, everything is evolving. We are going through the evolution right now in the last 10-15 years. So one magazine, it's online magazine, TechCrunch, and Eileen Lee, she's an American seed investor and she's also a VC. And she coined this word, unicorn, somewhere in 2011 or 12. It's a $1 billion startups. Okay, the valuation exceeding $1 billion are called unicorns, which has attained a reasonable size. And most of the VCs look out for these unicorns. And there are about 229 unicorns as of January 2016 world over, which includes Uber, Xiaomi, Airbnb, Snapchat, which is an alternative to WhatsApp, Dropbox, Pinterest, and Uber was valued at $51 billion at that point of time. Now, what is a dragon? Most of the VCs now slowly started looking at dragon, which are bigger size firms, which raises $1 billion from investors in a single round. Okay, that's the difference between a unicorn and a dragon. Some of the dragons are Uber. The second one, Didi, is a Chinese taxi aggregator. Airbnb, these are some of the dragons. And India has got the first dragon in Flipkart, which raised more than $1 billion in single round from investors. Sequoia Capital, which is a leading VC, they have 7 dragon investments, which includes WhatsApp, FireEye, all these, LinkedIn, YouTube, Google. Greylock Partners has got 4, which again they have also funded LinkedIn and Facebook, one point of time. Union Square Ventures with 3 dragons, Twitter, Tumblr and Zynga. These are the number of dragon investments by big investors world over. In Indian scenario, you must have heard a lot about this Startup India, Stand Up India in the last 2 months in the social media as well as in the TV or newspapers. A lot has been said and done, spoken about it. Some of the interesting features of this which are taken for granted is the app-based clearing of clearance given and clearance in the same day clearance, which was spoken about yesterday. E-registration, a self-certification system. Even yesterday there was a mention about the self-certification system. Somewhere around I think 9 or 13 laws, labor laws and other laws, we are exempted from it, from inspection. Self-certification will do that. I am complying with all these labor laws. First 3 years they will not inspect you. When I started my first enterprise, somewhere in 1992, it was a granite unit. 1988 I started it. Within 4 years I got out of it because I had to deal with 20 different government departments. Right from fire service department. I have to keep a spittoon for people to spit. If you don't keep it, then there is a law which says that it is against, that I can be punished. I shifted from that to I became a stockbroker because that was not, I have to listen to only one regulator, which was SEBI. Now they have brought it down. some of the startup investments in India, if you look at it, Ratan Tata in his personal capacity has done a lot of investments in Ola, Paytm, Urban Ladder and Car Deco. You've seen this lady? She has come to your college? You've seen her or not? Okay, I've not read about her. Very interesting lady. I think you should invite her one day to talk to you about her achievement. She is based out of Coimbatore. She did a technology course from Coimbatore College of Technology, and then she went to Bangalore to work in Wipro and Singapore, and then came back. She's a housewife, has got 2 children, and she started this company, e-scooters, electric scooters. And she wanted to take it to next level. How to take it to next level? She needed funds. And even today, the major part of his factory is in Coimbatore. If you go there, there is a nice garden outside the city, and many ladies work there. A lot of ladies are employed in this startup. She wrote a letter to Ratan Tata, and her husband laughed at it, as though Ratan Tata is going to reply to you. That's where the packaging comes. When you're going to present something to somebody who is very busy, and you expect him to reply, it should be short and crisp, and you should package it in such a nice way that he would like to know more about it. So the letter she wrote was only 1.5 pages. She said, just give me 5 minutes time, I'll come and explain the concept. Somehow it caught the eye of Ratan Tata. He called her. She went all the way to Bombay House, gave her exact 5 minutes, and at the end of the 5 minutes she said, it looks very interesting. Can you wait for me another 1 hour? I have an appointment. After that I want to talk to you for about 30 minutes. And look at such an unassuming lady. You don't need fancy. So she met him again. Within half an hour he said, okay, I'm funding this, but before that I'll be coming to Coimbatore. I want to see the plan. Within 1 month he visited Coimbatore. I think he was in Taj Vivanta. This lady went there to meet him again. He said, I'm sorry, I don't have time to come and see your plant. She said, no problem. I brought 3 of my models, which is downstairs. You come and take a look at it. It only need another 10 minutes for you. He was very impressed when he came down. He thought normally people take a bicycle or something else and add something to it, battery to it. But this was completely designed by her, everything. So he was very impressed. He said immediately that, okay, I'll fund this entire thing. And that is how she got the funding, and she came and spoke to many of us about how she got it. You must have heard about this guy, Ritesh Agarwal. He started his venture at your age with nothing in hand. The property is owned by somebody else. The asset is owned by somebody else. He has not put in any money. The idea or the concept is his. Client aggregation is his. Customer aggregation is his. That's the idea or the concept he has brought in. He is going and putting his OYO in every room which is owned by somebody else. The sticker of OYO with basic standards. So this is another company. If you look at the way he is expanding very fast. And this is not a company like the typical retail companies where they don't have a strong cash flow model. Online retail. This has got a cash flow model. And the total market is $20 billion online budget accommodation space, like Airbnb, which is basically, it's a model of Airbnb, but slightly different from that. And right now 4,500 hotels are listed. And as a startup, he has taken over another startup, Zo. Okay. And he's planning, it started with 26,000 rooms in 2014, now 8.95 lakh used room nights, that's what they call it. Close to 9 lakh used room nights, which spreads over 174 cities. And now he has gone to Malaysia. He's gone to Malaysia and he's adding slowly international destinations. And he has raised $100 million from SoftBank and other few VCs put together. Now, of course, I'll skip all these things. You know what a startup means. According to the Startup India, now the Government of India regulation, it is an entity which is registered or incorporated in India not prior to 5 years, with an annual turnover not exceeding 25 crore in any preceding financial year. Okay. And an entity means it can be a private limited company, it can be a registered partnership firm, or it can be a LLP, limited liability partnership. It cannot be a one-person company or a sole proprietorship. And what are the qualities needed? Generally, they look at how creative and how innovative is the concept or the people involved in it. You need high energy levels and positive thinking, because the gestation period could be longer than what you think, and the ability to handle ups and downs. If you have listened to Mr. Murugavel Janagiraman of Bharat Matrimony, or the series of companies he has got, how he has come across the failures and then crossed the bridge. You need a balanced mind and 24/7 work culture, and you are the CEO too. Everything, all in that organization, and ability to cut through red tapeism. This is something which you may find it very difficult when you go and meet the government officials on certain issues. For example, take the case of service tax. You need not register initially, but some regulatory requirements are there where you have to register for service tax in certain cases. And you may not have any service tax, you may not collect, you may not pay. So you have to file a nil return. Now, why should I file a nil return? And if you file that nil return 5 days late, they'll send you a penalty notice of 20,000 rupees. Now, these are all the challenges which the government is now slowly trying to remove all these things. Hopefully, they will try to minimize it. Ease of governance, ease of doing business will go up. And what do they look out? They look out for disruption, total disruption, completely changing the way we think, changing the way we perceive things. And it need not be an invention, it need not be a new scientific product. It is only the thought process which should be different. And what do they look out for? High risk reward ratio. VCs don't come to you to put their money, to double their money in 1 year's time or 2 years' time. They can easily do that in the stock market. They come to you, they want to multiply the money 10 times. Do you have that kind of a business model? That's what you should look at. That's why they don't look at a normal automobile company or any regular startup. They look at tech startup generally, but now that is shifting. Now they are also looking at other kind of innovative products. But initially their concentration was on tech product because the multiples are very high, 10 times, 20 times earnings. Because they fund 10 projects, they will lose in 8 projects. These 2 projects will give them 20 times return, which will help them. So that's what they look at. And they also look at the management team, who is the management team behind it, what is their experience and expertise, and the industry specialization, and what stage the company is in, early stage or little advanced stage, or are they ready to go for public issue, and what kind of business plan they have, the package, how you package is important, like I said earlier, and they do the due diligence. A lot of information is available on this too. If you go to this website, the SIDBI's website, this is a Small Industries Development Board. And what time you plan to go to funding? That's again important from at PPT stage, which is right now, some of the students presented, this is a PPT stage. Or you want to go at the proof of concept, which is again in the PPT they mentioned, they will do, the proof of concept will be there. At that stage, or you will create a prototype and then go to the market. At every stage, your value goes up. The kind of money you can raise goes up. If it is PPT stage, your valuation will not be that big. If you have a proof of concept, I was interacting with a student who is trying to design the windmill in a different format. From the usual format, he is trying to where the efficiency goes up by 33%. So he is trying to develop a proof of concept. We are finding it very difficult. He is talking to IIT incubator. If he comes out with a proof of concept, then more people will look at him because it's alternate energy. They also look at the scalability and bandwidth, your reach. And both the PowerPoint presentation which made, I think they look at the bootstrapping or their own funding. That's how I assume. I may be wrong. You can correct me if I'm wrong. But then, there are some advantages that you are not answerable to anyone. You can do whatever you want. You burn the money. If you succeed. If you fail, okay, you can go back to work or do something else. But then the drawback also, it is your own money. It places a lot of mental imbalance. You will be very mentally disturbed when you spend even every 1 rupee. So that will put a lot of pressure on you to make right decisions. Seed funding. A lot of people provide seed fund, but then getting into that club is a little difficult. Some people like Thai Chennai or Thai Bangalore, the Indus Entrepreneur, they are helping you in that regard. Not much of difference between all these are nomenclatures used at different levels depending upon the size. Angel funds, probably which includes your family and friends. And you look at venture capital fund, that this is a stage where you are about to take off to the next level. They are high risk investors, as I mentioned earlier. They are not satisfied with 1:2 risk reward, or they are looking at 1:10 or 1:20. The potential for above average returns are important. They look out for unicorns and dragons. They have a lot of advantages. Couple of incidents I can quote wherever they have funded. They bring in a lot of, apart from money, they also bring in their expertise, their experience in funding other projects, similar projects, the management talent, the talent pool or the skill sets they bring in, their contacts can be leveraged. So quite a lot of other incidental benefits come to you through the venture capital than simply funding. Because venture capitalists, unlike somebody who provides you seed capital or angel funds, venture capitalists are more experienced people with a lot of experience with failures than successes. So they'll be very careful in it and they can share their expertise. Banks do provide, but they are very cautious, and I don't think they are very encouraging, except SIDBI and some of them like IFCA Venture Capital Fund, or some of them. Mezzanine financing is not for a startup. It is for a startup which is going into, or before going for a public issue, you can look at, after a certain level of growth, you can look at mezzanine financing. And at that level, you can also look at SME exchange. Whenever you you start a project, you initiate a project, you should look at the exit, the end in sight first. Without that, you cannot enter today. The days have gone where you start a business for your lifetime and you hand it over to your children. Now you don't do that. Why? Because the technology is changing very fast. In the 80s, when we start a business, when I started my business, I needed two things. A telephone connection, which costed me 30,000 rupees in 88, under Tatkal scheme. And I needed a typewriter. You've seen typewriters? Okay, it's extinct now. So these are the two things you need to start a business first of all. And the blue chip, one of the blue chip company trading in the stock exchange was a Faceit Asia, which was making typewriters. Today, where is typewriter? Everybody, we use only computers. And in 90s, when I went to the trading ring or trading hall first time, we used to take something called a pager. A pager used to cost 10,000 rupees, alphanumeric pager. You've seen a pager? Okay. Now today a smartphone costs you 5,000 rupees. You can get a smartphone at 5,000 rupees. So the technology changes. The company which was making pager defaulted. In 92, when I wanted to send an email to Delhi, a friend or a stockbroker in Bombay, I have to go to a company called ICNet. I hand over my typewritten letter to him. He will key in and send it to ICNet Bombay, and they will take a printout and go and deliver. And Hotmail came in 92. Completely everything changed. ICNet, which was trading at 30-40 rupees, collapsed and traded at 2 rupees and got delisted. So you have to be faster today. You have to look at exit. When you enter, you should look at exit. And one interesting exit case study which I can share with you is Landmark. You should call her one day to talk, Hemu Ramaya. She exited Landmark. Landmark bookstores was there, in Nungambaka Mai Road. She started it. She was a sales girl in Taj Hotel, had a bookshop. She was a sales girl in 80s. She thought there is a big market in Chennai apart from Higginbotham's, which was basically selling school books and other serious books. So she started Landmark in 88. And somewhere in 2000 early she quit. She sold it to Tatas. So once I was traveling with her to Bombay, and then I asked her, this was in 2004, 5 or 6. I asked her, why did you sell this company? Because her husband is a stockbroker and a good friend of mine, Jay. So I asked her, why did you sell this? Immediately she picked out something from her handbag and showed me, this is what made me sell this. That is Kindle. And I never thought Kindle will be a serious challenger or a contender to the bookshops. This was in 2005 or 6. Now I carry my Kindle with me where I have about 600, 700 books. If I don't like a travel book, I go to a religious book. If I don't like, I go to spiritual book. All 700 books in one small kit. It's there in my mobile also. So now Landmark is closed. Now, are Tata's fools? I mean, that's a different case study to be done, why they bought it, Simon Tata Group bought it, but that is a different case study to be done. But she thought that this is the right time to exit instead of waiting for a better valuation. I think they got a valuation of about 100 crores, 104 crores. That's a kind of the valuation Landmark got when she sold it. And she got out of it. So exit is very important. You should look at exiting also. One more interesting case I can tell you is that a company called Moser Bayer. You've heard about that company? Which was making CDs. Today, any one of us use CD? When I bought this computer, I refused to take delivery because it never had a DVD drive. And my son went on laughing. He said that nobody uses DVD. When was the last time you used DVD or CD? I've never used it. It's a mindset. I just wanted a DVD drive. But then I realized it. Then I said, okay, everything is through pen drive now. So Moser Bayer share, which was trading at 300, 400 rupees, now it's nowhere. So you have to look at exit also as a part of the entry strategy. When I am planning to exit, at what stage I am planning to exit, and at what valuation I am planning to exit. Sometimes you may lose a good valuation also by waiting too long. NSE has got a SME trading platform. Small and medium exchanges can come out with a public issue. Anywhere, if you need 1 crore, you can come out with a public issue through SME exchange. Less of compliance, unlike big companies which have to file returns once in quarter, you can file once in 6 months. Unlike big companies which have to publish quarterly returns on a newspaper print, you can publish it online in your website at a lower cost. Compliance are less. So this platform has got, NSE has got about 10 companies listed in it. You can come out with, I think it's not legible, but basically I think it can be anywhere between 1 crore to 10 crore. If it is between 10 crore to 25 crore, you can either go to main board or continue here. The moment it crosses 25 crores, you have to go to the main board, which is National Stock Exchange or Bombay Stock Exchange, not the SME exchange. So this SME exchange helps the startups to raise some money at a little later stage, maybe in your 3rd year or 4th year, because you need a track record. In BSE SMX, which was started hardly about 3-4 years back, today they have 125 companies listed, small and medium enterprises listed, mostly startup companies. And out of that, 16 migrated to main board, which is Bombay Stock Exchange. Right now, 109 companies are there. In Singapore, you have Springboard, which is something equivalent to this. And market cap of these companies combined, put together, is about 6,815 crores. And the number of companies listed on institutional trading platform is 21. And these are the various stages how you go for funding. The valley of death is something very important. You have to cross that to come to positive cash flow, so that you can get out of seed capital and go to the next level of funding, early stage funding from angels or venture capitals. And then you look at the mezzanine funding before you go for a public issue, and then you go for a public issue. These are the various stages at which you go for this. Now finally, this is something which is catching up right now. SEBI is yet to come out with a comprehensive guideline on crowdfunding, but it is already started happening. You have a nice concept and a nice project, you put it on the website or on the social media and try to collect money from everybody, right from 1 rupee to a few crores, and go for it. There is a movie which is launched in Tamil Nadu by a book vendor called Discovery Book Palace. Through crowdsourcing, he is trying to make a movie, crowdfunding. So this is some new concept which is coming, and which is mainly generally used for social or by social entrepreneurs for social cause. But now it is also coming into the business side. There are various stages which is handled by, if you look at One Crowd, there is a website, I'll give the link to you. This company handles, it's a matching engine, or they match the people who want money and people who have money. Okay. What they do is, they do the sourcing of the deals. You have a concept, you have an idea, you go and contact these people, One Crowd. And what they do is, they do the due diligence, and they help you in preparing a business plan, and they screen it. They have a screening committee which screens it and validate it. And after validation, they present it to the investors. And then, after the closure is done, deal closure is done, they also continue to mentor you. This is the very important part, unless otherwise mentoring is there at this stage. It's very difficult. And then they also do the monitoring part, and exiting comes. They not only collect money from the investors, they also put in their skin. They also put in their money. For every 5 lakhs given by me, they also put 5 lakhs into it. Yeah. They have come out with one of the interesting project. If you look at their website, onecrowd.co. This is their website, number one, crowd.co. You can register yourself as an investor or somebody who has a startup who wants money. Only thing you have to give is that you have to register by giving the details of your email ID, mobile number, and upload your passport, just for verification purposes, so that they don't give the information to everybody. They do this. Then they provide you the detail. One of the interesting project which I was looking at is the Asiana Housing Society or something like that. I forgot the name. What they do in Bombay is that they go to big condominiums or big apartment complex where about 800, 100,000 apartments are there. They take care of the maintenance. It's not a simple maintenance company. And they tell you that they will give a 25% discount than what the current expense is. They don't send a retired, some policeman or military man. They send somebody in their 30s as a caretaker, as a security man, or fully trained electrician, plumbers. And they also provide air conditioners at 10%, 20%, 25% discount to you because they buy in bulk and give it to you. They make money there. In AMCs they make money. So that seems to be the source of revenue. You can download that. They provide you the complete details of that company. This is nothing new. But then how they are able to do it? Now that is something new. The promoter is from Temasek, which is a Singapore-based company. Singapore government company, in fact. So 3 projects are uploaded there. You can take a look at it, which will guide you how to present your case to them, if somebody is interested in that. There are various rounds of funding which happens. Now this is something which I was telling, the right to fail. The failure is not punished in US or in many developed countries. Chapter 11 bankruptcy code, where you can restructure or you can say that I am not able to repay any of my debtors, this is what I can do. Somebody will be appointed to take care of all these things and settle, and then you can again restart your business, which is not possible in India. That's why they are trying to bring in a bankruptcy code. You look at some of the case studies, General Motors, Kodak, American Airlines, Ashley Stewart, which was making large, American Airlines, it filed for bankruptcy in 2011, but then later, now it is in the S&P 500 list. Complete within 4 years. Similarly, General Motors, in 2008 recession, it brought bankruptcy to General Motors. Now today, they are doing reasonably well. Kodak filed for a bankruptcy because of the technology change. Nobody takes the old style of photography, but then it took some time for them to change to digital photography. Even today they are not very successful, but they are out of danger. They are out of it because this is provided by the Chapter 11 bankruptcy code. Now you look at the bankruptcy law which is going to come in India. It is planning to set up Insolvency and Bankruptcy Fund of India, and also setting up an Insolvency and Bankruptcy Board of India, which will regulate the people connected, the professionals connected with this code, and agencies and information utilities. And in the union budget, these are all some of the concessions given for the startups. Their profits are exempted in the first 3 years out of, the 3 years out of 5 years. But the challenge is not many startups make profits in the first 3 years or 5 years. It takes more than that. The capital gains won't have to be paid if the proceeds are invested in government approved fund of funds, which they are trying to create now. 10,000 crores fund they are trying to create to fund the angel funds or seed capital funds, which will in turn fund the startups. And the profits made after 2 years of holding will now be exempted from capital gain tax completely compared to 3 years earlier. In my opinion, it should be brought down to one year so that it is on par with your stock market investment, because the risk is equally high here. And the registration of companies will be done just in 1 day. That's what they claim. If they do it, that is something very, very, very good. And FM also announced the setting up of a fund to raise 2,500 crores annually for 4 years to finance the startups, which will amount to 10,000 crores. I would not recommend any of these books. I would recommend some of these books. If you are interested, I have not mentioned it here. Startup is an art, all about art of decision making. That way you should read some of the books like Predictably Irrational by Dan Ariely. Look at that book, and Nicholas Taleb. His book, you should read all his books. Rashmi Bansal, who is going to address you, I think I would really like to appreciate your college for inviting her. It is a good choice. And Geeta Peramal's Business Maharajas. And Daniel Kahneman's book is a novel laureate, Thinking Fast and Slow. It's an excellent book on how we make personal choices. Some of the website, I'll leave this PPT with your professor. You can note down from them. If you have any clarifications or questions, you can always ask me now, or you can reach out to me later. And with this, I conclude my speech, and thank you very much. I'd like to thank the management. Thank you.